Hey everyone, Jesse here. I just want to bring this to everyone's attention. The Federal Reserve just released their latest data for what they believe is going to happen down the road. So basically, the Federal Reserve, it seems like right now, is they're kind of reacting right now in a way that's becoming more hawkish. Basically, hawkish is just they're just getting worried about inflation and they want to try to tame this down. Now, obviously, they've done quite a bit already that has led to that more hawkish tone. They have done. They obviously doubled their taper faster. Doubled their taper faster. So instead of dropping it down each month by 15 billion, they have now done 30 billion. They were supposed to be done tapering in June, and now they will be done in March. So they have made some little. So they have made some changes in that to what they originally thought. So they doubled that taper. They started talking about raising interest rates, which caught quite a few people off guard because we really didn't think that the Fed would do anything really until at least the end of 2022 of this year, or even the beginning of 2023. And they didn't really see too many rate increases until that 2024 area. So this is definitely some big news that they're coming out with right now. They have led to some things that have got us to this point, but they have really kind of changed their tone quite a bit. Whether it's talking about just not, obviously it's not transitory anymore. All these things they've been kind of mentioning as soon as Joe Biden announces Jerome Powell's second term, he all of a sudden turns more hawkish. So it makes me kind of wonder if something like that doesn't have something that affected it. They talked about something, what they needed to do, that sort of thing. And they plan on doing this with 4 million less workers in the workforce since January of 2020. So we have 4 million less people in the workforce right now than in January of 2020. Crazy. The Fed was the ones that were saying that they were wanting to get back to pre-pandemic levels before they even thought about raising interest rates. Now the taper, they did say that they could probably end before that, but they're really changing their tone right now, and it's kind of freaking out the stock market. I don't know if anybody's been following it. If you have been, you notice that a nice little pullback has been coming, especially to tech stocks. With these interest rates rising, it's just going to be more expensive for them to borrow money. So now let's just talk about some predictions that they're talking about. Many analysts, and obviously the Federal Reserve, are also all predicting now that they're going to raise interest rates 3 times. So we expect one to come right after the taper, basically. So in March, we expect the first one to hit right away, which is pretty crazy because usually they let that kind of all tame out and then wait a little while, maybe several months, and then all of a sudden you get an interest rate increase. But this is going to happen really, really, really soon, right after the taper, basically. Could be several weeks, could be several days. We have no idea, but we do expect that first one to hit in March. And then we expect another one to hit during the summer. So that's kind of what we are expecting right now. And we'll kind of have to see how that second one goes, because I do believe that if they do that during the summer, we could really start seeing some businesses, stop investing as much, kind of pull back their money, that sort of thing, because it's just going to be more expensive. We do expect a little bit of a slowdown when they do this. And that would be interesting to see what happens with inflation, because inflation during the summer was pretty hot. So it'll be interesting to see where we're at that point. But they're also expecting another one sometime in the fourth quarter, probably October, November time is whenever we're expecting that third one to hit. If you look at the dot plot of the Federal Reserve, that's what they're expecting right now. So just a huge turn of what they were talking about just back in September. This is the December report that we're getting right now. September, they were still expecting that taper to just kind of slowly weave off in June. So here we go. We're starting to change our tune. And I will be changing my investment strategy just slightly, not completely, because I do believe there is still going to be a nice little rotation into small caps. I do believe that it could happen a little later, especially if inflation kind of calms down a little bit, and then we could really see that big rally. So I just want to kind of talk to you about what I'm going to be doing. So we all know bond yields are going up right now. So we went from about a 1.5 10-year treasury to now we're all the way running up to nearly 1.75. I think it's slightly above that, actually. I think it's 1.76 if I remember right, the last time I looked on Friday. So yeah, obviously yields are rising, which is expected whenever the Federal Reserve is going to be raising interest rates. So a big sell-off in bonds, and they're expecting them to rise. Now a lot of people now are going to be going into recovery and banking stocks. So I'm not really familiar with the banking strategy and how exactly what banks will be able to benefit from what. I know like Bank of America, obviously, Chase, those kind of big banks. I'm not 100% sure. I would have to do a lot more research on those banks, but I do know that a lot of investors are going to be going into banks because obviously when interest rates rise, banks are more profitable, and especially as high as prices we're seeing right now. And it might be a while before we see those prices drop. Even with interest rates rising, it's going to be kind of hard. It's going to be kind of hard to bet against banks this year with those interest rates rising. So that's one that you could take into consideration is buying, those big banks like I was talking about, Bank of America, Chase, J.P. Morgan's another one, Wells Fargo, those kind of banks. But I can't tell you exactly which one to go after. I didn't really do a whole lot of research on those banks. It's kind of hard for me to know those. Not really familiar with that sector. So I'm going to be going into more recovery stocks. What I'm going to be buying a lot of is airlines. So we're seeing a big surge in COVID cases, obviously. There was one day we had over 1 million cases, and we're averaging, I do believe, somewhere around close to 600,000 a day right now. So obviously we've been rising pretty quickly and steadily. So we're seeing airlines right now really struggle because of all the flight cancellations they're having to do, staffing shortages, that sort of thing. So yeah, I think airlines is one that I'll be buying, like Delta, American Airlines, either one of those. Southwest is another one you could buy. Those type of recovery stocks I really like. I think those are bullish for long term. Once we kind of get out of this big surge, and I think people are going to be feeling more and more comfortable after this wave kind of goes away of traveling again, getting out. Obviously most parts of the country, the weather will be nicer, that sort of thing. So I do believe that's going to be a bullish thing for airlines. And then the next one I want to do is I'm going to be buying Dave & Buster's, which their ticker symbol is just play. Kind of weird, but yeah. Anyway, that's another recovery stock I'll be buying. Hopefully after this wave of COVID, people will really be, wanting to get out again after these winter months. I believe it's going to be a big thing for Dave & Buster's, so I'm going to be buying them as well. Also, another thing I want to talk about is like casinos. So Wynn Resorts, their headquarters is in actually Las Vegas, Nevada, and they own quite a bit in Las Vegas, but they don't only stay there in Vegas. They have other resorts, other places all around the United States. So I am going to be buying them. I think casinos are going to be another big thing. Casinos have already recovered fairly nice, but they have pulled back slightly. At least Wynn has. I know there was several others that have pulled back as well, just because of this whole wave going in. It's going to hurt them. But I think that once this big wave goes over, kind of blows over, I think people are going to be wanting to get back out in the casino. So I'm going to be buying Wynn Resorts. And their ticker symbol is just WYNN. And I'll be buying some of their stock. I like that. So another thing that I want to talk about is I think apartments. CPI data is really, really slow on getting apartment data because it takes a while for like leases to run out. So typically whenever you sign a lease on a rental, it's usually 12 to 18 months. So it just takes a while for those prices to steadily come up, and it takes a while for that CPI data to catch back up, back up with the trend of what we're seeing in inflation, housing prices, that sort of thing. So I do believe that's going to be a bullish thing, and I'm going to be buying one really in the heart of the Sun Belt is where they have a lot of apartments, which is where the big boom is going. So Mid-America Apartment Communities, or ticker symbol MAA, so MAA. And they're just blowing up in the Sun Belt right now. They're building like crazy out there. And again, that's where people are moving. So that's a bullish signal. I think that's going to be a big one. For many years to come, I'll be holding that one for probably long term. It's just one that I really like. Apartments, rentals going up, all that sort of thing. Very, very bullish on that. And then again, I'm gonna be nibbling on some small caps. So in what I mentioned in my last, actually 2 videos ago now, it's just called like rotation to small caps. Is it coming? That's what the name of the video is. And I really am bullish on this. I think this is gonna be big. If we could start seeing a little bit of inflation tone down, we'd start seeing that inflection point where we're kind of going like this, but if we could start seeing it go down slightly, I think we're going to see a huge boom in small caps. I do believe that's going to happen. I could see during the summer, we could start seeing supply chain issues start to ease. So that's another thing on Ford. I'll be buying a little bit more Ford as well. But these small caps that I was talking about in the last 2 videos that I made, I'm going to be nibbling on those. And I think that if we start to see that nice little inflection point to the downside, or even just ease like so much, so we get these CPI data every month, if we could start seeing that, we're right now like monthly, we're basically getting like 0.7, 0.6, 0.8, that sort of thing, month over month inflation. If we could start seeing that come down to like 0.2, even 0.3, I do believe that's going to be a big thing. And I could see a huge takeoff in meme stocks, momentum stocks, these small caps that I was talking about. And I could make a video on meme stocks if we start getting these big data points to where they're starting to inflect down. I do believe that we're going to see a huge roar in those. And it's going to be like 2020 all over again. Maybe not quite the biggest surge of what we had, but I do believe it'll be a big surge going in that direction. So we'll see what happens. I'll keep you updated on what the Fed's thinking. And just thanks for watching.